Welcome back to the Deep Dive, everyone, especially our followers from the Excelage podcast show. I'm Lex, and as always, I'm here with Vera.
Mabuhay. Great to be here.
Today, we're really zoning in on something super relevant for you, our Filipino first-time home buyers and property investors.
Yeah, we're taking a close look at the latest buzz from the Bangko Sentral in Philippines, the BSP, and what market analysts are saying about real estate lending right here in the Philippines.
Exactly. Think of it as your essential briefing.
Your shortcut, really, to understanding what's actually happening on the ground.
Yeah, we've gone through a briefing doc based on a recent Business World Online article, plus our own notes to pull out the really important stuff for you.
Our mission today, pretty simple.
Yeah.
Give you a clear picture of the current trends, maybe some potential bumps in the road, and what the future might hold for the property market.
Right. We want to empower you, help you make those big decisions with confidence. Okay, so let's dive right in. What's the main headline here? Seems the BSP is watching property lending much more closely now.
That's the top line, yeah. What's interesting, and what the BSP is definitely monitoring, is how much of the banks and trust entities' assets are tied up in real estate.
Okay.
By the end of last year, December 2024, their real estate exposure ratio, it climbed to 19.75%.
19.75, wow.
Yeah, and just to put that in simpler terms for you folks listening, imagine a bank's total investments are a pie. This means nearly 20%, almost a fifth of that pie, is now in the real estate slice.
And that's up from before.
It's up from 19.55% just a few months earlier, back in September, so a noticeable increase.
And it's not just the percentage growing, right? The actual amount, the pesos being loaned for property, that's also up.
Exactly. We're talking about a 7.9% increase year on year.
Yeah.
It reached P2.95 trillion by the end of December. That's trillion with a T.
P2.95 trillion. Okay, so definitely more money flowing into real estate.
Precisely. And if we break that down a bit more for you, we see growth in both residential and commercial.
Right.
Loans for homes, for residential properties, they jumped 9.6%, hitting P1.1 trillion.
Okay, almost 10% growth there.
Yeah, pretty strong. Commercial real estate loans also went up, though maybe a bit slower, 6.9%, reaching P1.85 trillion. So it really paints a picture of an active market.
Absolutely. But here's where it gets maybe a bit more complex for you, our listeners. More lending is happening, but we're also seeing a rise in non-performing loans, the NPLs.
That's right. These are the loans where borrowers are, struggling to make their payments.
Yeah.
And this is where a key difference between residential and commercial properties kind of pops up.
Okay. What's the difference?
The BSP specifically pointed this out. So commercial real estate, it currently makes up the bigger piece, about 62.5% of the total value of all non-performing loans.
Got it. So more bad debt in total value is commercial.
Right. But, and this is the crucial bit, the rate at which these problem loans are increasing, that's actually faster in the residential sector.
Faster growth in bad residential loans.
Yeah. In fact, by September 2024, a pretty significant chunk, 65.2% of all new non-performing real estate loans were for residential properties.
Whoa. Okay, and this is particularly relevant for you listening, right? Especially if you're a first-time home buyer.
Exactly. Because this increase in residential loans going sour, it's happening mostly in the mid and low-cost housing segments.
The very segments many first-time buyers are looking at.
Precisely. It suggests that, affordability issues or maybe other economic pressures might be hitting buyers in those brackets particularly hard right now.
That makes sense. Okay, so if we pivot back to commercial real estate for a second, you said it has the larger overall share of NPLs, but the growth isn't as fast as residential. But the BSP had some other insight there.
They did. It was quite insightful, actually. They suggested that the full picture of potential problems in commercial property might not just be in the bank's NPL figures.
Oh. So where else should we look? Where should you look?
Well, they're hinting that these challenges might actually be showing up more clearly if we look at the financial statements of the real estate developers themselves.
Ah, okay. So the stress might be building up on the developers' books, not just the banks. That's interesting. Raises a question for you listeners. Where are the weak spots really showing up in commercial?
Exactly. It means we need to look beyond just the banks. So Considering all this, what does it mean for you, the buyers out there trying to navigate this?
Yeah, what's the practical impact?
That's where insights from analysts like Joey Roy H. Bondoc from Colliers Philippines are really valuable for you. He's noticing that buyers are like very actively hunting for good payment terms, incentives,
Deals, basically.
yeah, deals, especially for ready-for-occupancy or RFO units. People want something they can move into quickly, maybe with easier terms.
Which makes total sense, doesn't it? If some buyers are struggling with repayments, like those NPL figures suggest, they're naturally going to look for deals that ease the upfront burden.
Precisely. And Mr. Bondoc points to what he calls a pretty substantial number of unsold RFO units.
Mm-hmm.
And what's key for you to note is that nearly 60% of these unsold RFOs, they're in the mid-income segment.
The same segment where we're seeing that faster rise in residential NPLs.
Exactly. And it's a segment that really relies heavily on getting bank mortgages. So the pieces kind of fit together, you know.
Yeah, they do. So lots of unsold mid-income homes and buyers in that same group potentially facing more repayment stress. That's definitely a dynamic you should be aware of. How are the developers responding then?
Well, they're trying to make it easier. They're offering more extended down payment terms, stretching it out to help you, the buyers, manage the initial costs and hopefully qualify for financing.
Okay, trying to bridge that affordability gap.
Right. But Mr. Bondoc also adds a word of caution, particularly aimed at the banks, about these RFO promotions getting maybe too attractive.
Oh, what's his advice for the banks?
He suggests they need to be more cautious. Like, while these sweeter deals help developers shift inventory, they could also mask underlying affordability issues.
Right, if the buyers still can't manage the long-term payments, it just kicks the can down the road.
Exactly. It's about finding that balance, making sure the market stays healthy for everyone involved.
Yeah,
A tricky situation you need to be mindful of as a buyer, too.
absolutely. Now, another big thing the BSP mentioned was this oversupply, specifically in the condominium market. This must be top of mind for you property investors listening.
Oh, definitely. The BSP estimates it would take, get this, 34 months to sell off the current condo inventory.
34 months, that's almost 3 years worth of supply just sitting there. That's huge for you investors to factor in.
It's significant. And even though we've seen housing prices recover somewhat, they were up 6.7% year on year in the fourth quarter, the vacancy rates are still high.
So prices are up, but lots of empty units. How does that work? Seems a bit contradictory for you trying to understand the market.
Well, what seems to be happening is that the supply, the number of available properties, is just growing faster than the demand in the secondary market can absorb it. More units are coming online than there are renters or buyers for them right now.
Ah, okay. Supply is outpacing demand, leading to vacancies, you might see.
Exactly. And it looks like developers are getting the message. We saw a more cautious approach from them in the first quarter of 2025. Not many big new project launches. They seem to be, tapping the brakes a bit.
Makes sense. No point adding more fuel to the fire if the market's already saturated. Okay, so beyond the bank lending and the oversupply, were there other potential risks the BSP flagged that we should know about?
Yeah, they also touched on the rise of in-house financing by developers.
Right, where the developer acts like the bank.
Pretty much. The developer offers installment plans directly to you, the buyer. It can help them make sales, sure, but it also means the developer takes on the credit risk.
So if you, the buyer, default, the developer takes the hit, not the bank.
Exactly. It shifts the risk.
Yeah.
And the BSP noted that these past due and impaired receivables, basically, money owed that's looking unlikely to be collected, are still elevated, especially for developers who had exposure to POGOs.
Ah, the Philippine offshore gaming operators. That sector's seen some turbulence.
Yeah, regulatory shifts and whatnot. It shows how interconnected things are. Those changes clearly have wider ripples affecting developers' finances. These are all things you might encounter or need to be aware of.
Okay, so we've laid out quite a few potential risks and challenges, but surely it's not all doom and gloom. Are there any positive signs we can look towards?
Yes, definitely some bright spots or potential bright spots to consider. For one, Mr. Bondoc from Colliers, despite the current conditions, he doesn't actually expect significant drops in real estate prices.
Okay, so price stability maybe. That's good news if you already own property.
Yeah, his outlook suggests relative stability, which is somewhat reassuring.
What else is looking positive?
Maybe more impactful for you as potential buyers is the expectation of lower mortgage rates down the road.
Ah, interest rate cuts.
Exactly. The BSP governor, Eli Remolino Jr., has indicated they're still on track for monetary easing, meaning rate cuts are expected later this year and likely more in 2025.
And lower rates mean cheaper borrowing for you.
Right. That could make getting a home loan more affordable and potentially boost demand, especially in the pre-selling market where people lock in deals before construction.
Okay, that's definitely something you should keep an eye on if you're planning to buy. Any other potential tailwinds?
Remittances, always a huge factor here. Mr. Bondoc highlighted that BSP data shows households receiving money from overseas Filipinos often put some of that towards property.
Makes sense. A traditional investment for many OFW families.
So if remittance flows stay strong, that could continue to prop up demand for real estate loans. It's a vital source of funds for you potential buyers.
Good point. Anything else?
And just one more small indicator. The BSP's own Consumer Expectations Survey showed a tiny uptick in home buying intentions. It went from 4.8% planning to buy within a year to 5%.
Okay, not a huge jump, but at least it's not going down.
Makes sense.
Suggests some underlying interest remains among you, the consumers.
Exactly. A modest but positive sign.
All right, we've covered a ton of ground. Let's try and wrap this up with the key takeaways for you, our Filipino first-time home buyers and property investors. What's the absolute need to know?
Okay, the big message for you is the BSP is watching very closely. There are rising risks, particularly in that mid and low-cost residential space, where loan repayments are becoming tougher for some.
So for you thinking of buying, especially in those segments,
It means be cautious. Yes, there are deals and flexible terms out there, maybe more than usual, but you really need to crunch the numbers honestly.
yeah,
Be realistic about long-term affordability, not just the initial down payment.
don't get caught out by attractive upfront terms if the monthly payments will stretch you too thin later.
Precisely.
Yeah.
And for you property investors,
Ye-
that condo oversupply is a major thing for you to consider. 34 months of inventory. That's going to pressure rental yields and potentially make reselling slower. Factor that into your calculations.
Right. High vacancies, slower sales potentially. But as we said, there are potential upsides too, yeah? Lower rates, remittances.
Definitely. Those could provide support, especially for pre-selling. So it's not a one-sided story. You need to
Yeah.
weigh both the risks and potential opportunities.
Now here at Excel Edge, our focus is more on mid-price to high-ticket properties. And while some might think, oh, those BSP warnings are mainly about lower-cost housing, understanding these broader market dynamics is absolutely critical for you, even in our segments.
Totally agree. A stressed lower end can eventually impact sentiment higher up. Everything's connected.
Exactly. The overall market health matters. You need this full picture to make smart moves, whatever price point you're looking at. So if you are exploring properties in that mid to high range and want guidance navigating this complex market, please do visit us at www.exceledge.com.ph.
Yeah, having this kind of understanding, knowing the trends the BSP and analysts are flagging, it really empowers you to make strategic choices, whether it's your first purchase or you're an experienced investor.
Couldn't agree more. So if you found this deep dive helpful and want to stay tuned for more insights on the Philippine real estate scene, please hit that follow button.
And please share this with anyone you think could benefit: friends, family, colleagues, especially those looking to buy or invest here in the Philippines.
Help spread the knowledge. Staying informed and thinking critically is really your best tool in this market.
Absolutely.
And just to leave you with something to mull over, given everything we've discussed, the BSP's watchfulness, the market pressures, the potential bright spots, what factors will you prioritize most when making your next real estate decision here in the Philippines? Think about that. Thanks for joining us on the Deep Dive.